Hi there, it's Francis, and I'm looking at oil today. So that's crude. I've got the futures up. It is the crude. This is the continuous contract. So this is a chart that's generated from all the different calendar months. Anyway, I want to talk to you about it. I've reverted to bullish on crude recently, and we're making good progress on it. And I want to tell you my take on where the oil market is at the moment. So this is our crude chart at the moment. You can see a lot of analysis on here. We've been watching crude for a long time. Those that follow me and are at my academy and on my blogs will know that we had this setup, which had a lovely break. Key level was the $100 mark. We ran up to 110. We made that target. From there, we had weakness. We had an ascending wedge breakdown. We went through the funnel. That was the setup here. That is very bearish and down. More interestingly, more recently, on a shorter time frame, we've had an inverted head and shoulders. And I'll show you that pattern. So let's take we drop down. Here we are on the 4 hourly. This is that inverted head and shoulders. Traditional technical analysis would have you draw an ascending neckline through the high of the inverted head and shoulders. So this being one shoulder inverted, this being the inverted head, and then this here being the other shoulder. We'd have you draw the line through that high and through that high point, going through there and only giving you the breakout now. However, I do my head and shoulders slightly more differently, and I believe that there's always a price level, a horizontal level that best represents the neckline, and I'm mainly interested in horizontal levels because that is price. People are determined by price. Clearly, you could see the 85 level was broken with momentum to the downside, came up, feigned, couldn't hold it, needed to wind up to get above it, couldn't hold, traded below, gapped back up above, couldn't hold, traded below, bear flag up to the key level of 85, fell back down again, tried again, fell back down, made the head. When it broke out, it reached up to 85, capitulated again, reached above it, then broke down through it, traded around it, and eventually got away in terms of where we are now. So 85 was a key level for me. This was an inverted head and shoulders, so I got this target. I used that as instead of the traditional method to give me brisk an early target, so your breakout would have been a lot sooner. The breakout on a normal head and shoulders, this being an ascending neckline, would only just have occurred here north of the 90 level. So my method would have seen you long from 85, and you would be getting ready to take profits already at this level. What's that level? On the inverted head and shoulders, you would be 92.86 odd, and you'd be taking your first profits. Incidentally, however, there's much bigger things going on this on a much bigger time frame. So while I could take profits on a shorter time frame, I'm actually longer run very bullish. So this is what I see is happening. So let's go to a custom time frame. I'm going to make this 3 days, and every candle represents 3 days. So it's halfway between a week and a single day. Long run, we've been in a bullish trend. So if you can see this up. We had the highs of April 11 over here. That was in and around that level over here. You can see a big high that was made, 114. Big pullback down, all the way down. Double bottom at the $75 level. Right the way up. Then we had this continuation pattern that was setting up just below the 100 level, not really holding above the 100 level for a while, and then breaking it nicely on good volume. I've covered many clips on this, so I'm not going to overhash this. Up to there, target made to 110, so you would have snatched a quick $10 trade over very quickly and taken your profits, and that actually was the last before this down leg with the US election. We all know how sensitive oil prices are. But as we get closer to that US election event, things can't become too obvious, and there's other tensions building. We've got the inverted head and shoulders. I believe that's going to take us up to the 92 level. Eventually, I think we're going to get above this funnel, which was a zone, or certainly into it, and we're going to have a final top out there and pull down. So this is my prediction. I think we'll get up to a level round about these previous resistance levels here. Why? Because it, apart from it being a funnel, it also involves the $100 psychological mark. We'll have a pull down, and we're going to have a large version of one of these, what's known as a hunt volatility funnel, or a continuation symmetrical triangle with very unique characteristics in it. So for those of you who have just technical analysis bent, a continuation symmetrical triangle. However, there's a lot of unique criteria that I attach additionally to that. And for that, one of those things is 3 distinct impulses: a high one, a low one, a high 2, which we have up top there, and a low 2, and we have a third high and a third low that we'd look for. So we'd get up to there and then we'd see a drift. However, usually on this the later lows, the price action comes down a lot slower. See that in comparison to the capitulation we had down here and the breakdowns, or even this down leg where there was still a strong push down. It gets more gradual on the down legs, and the volatility is being ironed out. So this will be more gradual, and it eventually sets up a breakout, and we buy the high, the traditional high here, and we have our stop below the low. However, I also have a break and entry trade mechanism that says you can get in before that. So you'll get in before that, you'll run the high up. However, at some point you can and should expect a down leg. So you need a deep stop. The safest deep stop is right down below here, which is in and around the $76 levels. Those of you that are more aggressive can maybe look at some levels above 80. But being a buyer in crude, then be prepared to sit out at least a small pullback at some point. Which shouldn't be nearly as severe as this that we saw, as you can see from this HVF that was setting up over here. Why is this an interesting trade? Well, it's an interesting trade because there's a big amplitude. The target that's coming out of that, this is $115 we're at largely, call it 115, and it traded right down to 75. So you've got 25 and 15, you've got $40 move that I anticipate would probably kick off from around about these levels, the 94, our midpoint. We always put our target on the midpoint. You can see how these targets are put on the midpoint here. So if we get our third high over here, I'm doing a bit of guesstimation now. If we get a high in and around these resistance levels and the 100 level and we drift off down, we would buy at the 100, and let's say we pull down to roughly the 90 levels before breaking out through the 100 level. You would have a 95 as your level. You would add $40 onto that, and that would imply a target north of 135. So that's a really big target, as you can well appreciate, and that would put you somewhere up top here. And that's my take of what I anticipate we would have as our primary target. There would be interim targets as well, in the same way I did the interims here. It's too soon to get into that because we're still waiting for that third impulse high and third low, but it's very traditional and very common. 3 is a magical number in technical analysis. So I'm biasing long to crude, and I'll be putting everyone on notice that we will have probably a break and entry trade, and that I've taken already long on this, of using the inverted head and shoulders. However, in the longer time frame, if you hold on and you don't just take the targets, or you take some money off the table and you don't take everything off of the target, you'll probably push a little higher and eventually have a pullback, and then we'll have a really big move on the bigger time frame. So this is a 3 daily chart. So it's a bit like charting a weekly chart for a really big move. This won't happen overnight, as you can well imagine. The pattern itself has taken a number of months in setting up. In fact, this was April 2011, remember, so you're talking about over a year's worth of data here. However, the breakouts usually perform well within the time that it sets up, but nonetheless we're still talking months and months. So the shorter term trade is the inverted head and shoulders to target at 92. You can do that, get totally square, and then wait to see how this transforms itself, and wait for further notification for the big trend. Or you can roll over some of your position, which should still push a little bit higher, but there will also be a pullback to come later on. So if you trust yourself for getting out of that, or you want to hold on for the big trade, that's up to you. So this is Francis. This is an update on crude oil, and I hope it's interesting to you. Look forward to sharing it with all of you. Keep it, rate it please if you like the clip, and share it with all your friends. Look forward to speaking to you again soon and updating you on this underlying.